Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. On the 4-hour chart, we are still looking for this impulse to the upside. 1, 2, 3, 4, and 5, where we're waiting for this wave 4 to end. The common target area for this wave 4 is the green area over here between the 0.236 and the 0.5 Fibonacci, taken from the low to the high of this wave 3, giving us a target area between 50.3k and 47.3k, with the invalidation for a wave 4 being the 0.618 at 46k, and a more rare target is the 146 at 51.3k. Time-wise, we are still doing okay. This wave 4 is at the moment ranging between the 3 and the 4 fit time, taken from the high to the low of 2 to the high of this wave 3, comparing wave 2 with wave 4 in time. What we don't really like to see is this wave 4 continuing to range until the 5 fib time, because then the probabilities go down for a wave 4. The 5 fib time is sitting on Friday, the 23rd of February, 1 a.m. Central European Time. After this wave 4, we are looking for continuation to the upside in a wave 5. When we look at support levels, we have hit the 2-hour gap top for the second time. We have a gap over here on the 2-hour chart, also on the 4-hour, as you can see, and we have tested it for the second time. If price comes down again, probabilities are high to fill the gap and move to the blue support zone here, sitting between 49.1k and 49.8k. If we then zoom in to this wave 4, currently the highest probability scenario is a sideways double combo WXY. Zigzag structure in a wave W, complex corrective structure to the upside in a wave X, and then a flat structure in a wave Y. The common target area for a wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the high to the low of W to the high of wave X, giving you a target area between 51.1k and 49.7k, which is also a nice confluence with the target box we have over here, and the 1.618 is a less common target for a wave Y. Inside this wave Y, as mentioned, we are then looking for a flat structure in a wave A, B, and then a wave C to the downside. Common target for a wave B is between the 1.38 and the 1.236 Fibonacci, taken from the high to the low of wave A. After B is in, we are then looking for an impulsive structure to the downside in wave C, where the most common target for wave C is between the two 1.618s over here. One 1.618 is taken with the trend-based sub-extension tool from the high to the low of A to the high of wave B, and the other one is a normal Fibonacci from the low of A to the high of wave B, giving you this area over here, which is between 51.1k and 50.2k, with the 2.618 being a less common target for a wave C, but as we know with wave Cs, they can be quite extended. Another scenario that we have on the chart over here but has lower probabilities at the moment is a bigger flat structure in a 3-wave A, 3-wave B, and then a 5-wave C to the downside. The reason that the probabilities decreased for this scenario is because price rejected at the 1 to the 105 Fibonacci, taken from the high to the low of wave A, which is the target for a regular flat, but the regular flat is less common than an expanding flat. The most common target for an expanding flat is up here. In both cases, however, you do look for an impulsive structure to the downside, where you want to take the low of wave A and enter the common target area for a wave 4 of a higher degree, shown at the beginning of this video. Of course, the invalidation should be removed in this case because price took the high. In this particular scenario, another reason that the probabilities are lower for this one compared to the WXY is because of the internal structure of wave B. Most commonly, wave B is a zigzag, wave A, wave B, and then a wave C, but it is incredibly rare for a wave C to not hit the common target area for a wave C, which is between the 1 and the 1.236 trend-based fib extension, taken from the low to the high of A to the low of wave B, and as you can see, we didn't hit it, lowering the probabilities for this move to the upside to be a wave A, B, and a wave C. Then finally, if we go to the 4-hour time frame, the bearish scenario is that this move to the upside is a 3-wave structure in an ABC zigzag. price is now ranging above the 1.618, which is less common for a wave C, and we also already hit the 2 trend-based fib extension taken from the low to the high of A to the low of B. This lowers the probabilities for this move to the upside to be a 3-wave structure compared to an impulse to the upside. And also when we look at the high that's been made today, it's very much a 3-wave structure and not a 5-wave structure, so probabilities are higher to take these highs again sooner or later. If, however, this would be the high and we are looking for a move to the downside, what we want to see is an impulse, a diagonal, or a double 1-2. In an impulse over here, we are then looking for a 5-wave structure to the downside, a retracement in a wave 2, and continuation to the downside in a wave 3. In a diagonal, we are looking for a structure like this, which is way too early to call. At the moment, it looks like an impulsive structure. And for a diagonal, well, I prefer to look for a diagonal after a wave 4 is in. And in a double 1-2, we have a wave 1 impulse 2, 1, 2, and then a move to the downside. However, I would really like to see bearish CVD divergences if we are going to change the trend with any of these 3 scenarios. So if we then look at the probabilities of the different time frames, and on the 4-hour time frame, the highest probability is that we still have more upside to go, and we're looking for a wave 5. But first, we are waiting for this wave 4 to end, and we're going to keep an eye on the support area just below the common target area for a wave 4. And of course, we observe the reaction over here, because if we do see some strength, well, we might already go up for a wave 5. In the range at the moment, the highest probability scenario is a WXY. We entered the common target area for a wave Y over here, so it starts to become interesting to observe the reaction and look for signs of strength. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.